What's up, guys? Today I'm going to talk about the Bitcoin and stock market correlation. When stocks go up, does it mean Bitcoin goes up? Money printing from the Fed is causing stocks to go up. Does that help Bitcoin? If stocks crash, does Bitcoin go down? This is going to be the definitive video that helps you understand that relationship. The most important thing to remember is almost its entire lifetime, Bitcoin has been uncorrelated to stocks and really uncorrelated to almost every other asset. And that's something that people get wrong. So I'm going to cover what the current relationship is right now, what it's been in the past, what might have changed it, how it can trade this week, and lastly, the biggest mistake people make when trying to understand this thing. It's an easy one to make, but I think after this video, you won't make it again. So stick around for after the intro. I really do think you're going to enjoy this one. One more thing, actually, hit that subscribe button right down below, smash the like button, comment your thoughts, who you want to see next, share this thing everywhere. I appreciate you for tuning in. So stick around. In 5 seconds, I'll see you on the other side, covering the Bitcoin and stock market correlation. How the hell does it trade this week? Enjoy.
I have a wonderful electronic invention I want you to see. It looks something like this.
All right, so check this out. The reason I want to cover this correlation trade is because it looks like the correlation between stocks and Bitcoin is nearing its all-time highs again. It doesn't mean it's perfectly correlated, but if you look at last week, and also what happened in March, there are times when as equities rise, Bitcoin almost moves tick for tick. You also see it's especially relevant during the New York trading hours. So during the US trading session, as equities are rising, Bitcoin's almost perfectly tracking. Now, the most important thing to remember, and really the reason I'm making this video, is because there is a very common mistake where people say, well, that's always the case. And they look at the stock market chart for the past 10 years. Let's use the S&P 500. It goes up and to the right. They also look at the Bitcoin chart for the past 10 years. It almost follows the exact same path. And they say stocks and Bitcoin are always correlated. But they're missing the point. They're using the wrong way to calculate correlation. And don't just take my word for it. I can cover the math. Should I cover the math? I'm not going to cover the math. What I'll do is I'll show you an example on why people use returns instead of prices. It's the standard in the finance industry, so you don't have to take my word for it. You could also look at JP Morgan and how they calculate correlations between all assets. This is for the largest investors in the world. If it works for them, it probably should work for you. Anyways, you can use this chart to see correlation. Anyways, here's the correlation between stocks and gold and commodities and all these other assets, bonds. They're using 1 week rolling correlations of returns. The reason being, we're trying to figure out whether or not an asset or a financial contract is moving up together and moving down together. If you use price levels, you could be tricked visually by thinking something as ridiculous as how many trips you take to go to the bathroom is correlated with how Bitcoin traded that day. We're looking at price returns. That's what matters to an investor. You could also look at some of the top investors in the crypto space. What do they use? Well, Pantera. Here's a very famous chart showing Bitcoin's uncorrelated to almost every single asset for the past X amount of years. They use the past 3 years. You could also look at CoinMetrics, who I think is one of the best analytics firms in the space. They also show 1 week rolling correlations for the past 10 years. You can see it gyrates from being slightly positive correlated to slightly negative correlated, but really it's oscillating around zero. They're using returns. And the reason, once again, that we use returns, we want to understand as an investor, is this thing rising together? Are the returns correlated? If I buy the equities and I buy Bitcoin, are they moving up together that week or that day or that year? Not just are they hitting the same price levels. Visually, it looks good. It's that small difference though. I mean, go calculate correlations in Excel and you'll see very, very quickly why we use returns. So anyways, with that out of the way, the one thing that tricks most people is they think stocks and Bitcoin are always correlated. Well, that's just not true. For almost its entire lifetime, Bitcoin has been an uncorrelated asset. Now, things did change slightly in March. Correlation of almost every asset reached nearly 1. And this was a pretty unique situation. In crises, in events of serious panic, in market crashes, the one asset that everyone wants is cash. Now, why do they want cash? Why is it a rush to the exits? Well, because there's a serious mispricing as the world tries to price in the new events, the new news, whatever it is, and people need to run to cash as they move out of markets. So as people panic sell every asset, every risky asset that could drop, Bitcoin's in that bucket, equities are in that bucket, gold was in that bucket, right? As that happens, regardless of an asset is a safe haven, everyone will rush to cash. So in a panic, correlations will rise to nearly 1. This actually happens for hedge funds too, as ridiculous as that is. They should be hedged, should be able to avoid these, but in serious crashes and panics, you see the correlation of almost every investable vehicle rise to 1 because people rush for the exits. It's a liquidity crunch. They just want cash. So in March, correlations did really spike for Bitcoin and for equities. And it's something that's actually remained now for the past couple months. Correlations have remained higher than they've been in the past. Now, it's not perfect. It's not perfectly correlated. Just because equities move up does not mean that Bitcoin has to move up. Just if equities go down does not mean that Bitcoin has to go down. And that relationship broke down a little bit in June, which was great to see. I actually think the decoupling of Bitcoin to equities and that trade is extremely positive, maybe more positive than even the halvening. The most important thing for you to remember is Bitcoin in its history has been uncorrelated for almost its entire lifetime. Sometimes there's a slight positive correlation, sometimes a slight negative correlation, but that's what makes it so attractive as an asset. There are different things driving the returns of Bitcoin than are driving the returns of Apple, right? I know that risky assets will benefit from risk on in the markets, from people willing to take risk. Sure. But Bitcoin is something entirely different than equities, and it's been generally uncorrelated, which helps your portfolio by reducing risk. It acts as a way to kind of diversify your holdings. Now, the other thing to remember is use returns if you're trying to calculate this stuff yourself and understand, is Bitcoin actually correlated to stocks? And the last thing, lately, Bitcoin actually has been correlated to equities higher than it's been in the past. So if equities do quite well this week, it's why you might see some traders say, I'm going to tag on this. Equities are up. I actually think Bitcoin could go up. I had on Sam Tribeca last week on the Coinist podcast. You can see the episode right up here. Sorry, wrong corner, right up there. One of the traders at Alameda Research. Now, they trade billions every single day. It's one of the top trading desks in the world for the crypto market. And the way he describes it is, when the relationship is there, just play it. If equities and Bitcoin are moving together for that week, okay, that's something you can use. Maybe if equities are doing well, you can expect that Bitcoin will do well on the back end of that. But it's also important to remember that relationship will break down. Now, as we move on in time, it's realistic and rational to think that the correlation between Bitcoin and equities or other assets actually might increase. As more institutions own it, as more people own it, well, it gets lumped into a group of assets that everyone owns. There used to be an asset class called alternatives. It still exists, but actually alternatives are way more correlated than they used to be. And it's because as investors and institutions start to own alternative assets that should trade on their own, if the whole world owns them alongside with stocks, well, their correlations start to increase. So Bitcoin's in this unique situation being a new form of money, a new asset, being driven by entirely different returns, potential to be a safe haven, that it actually has been relatively uncorrelated. There are going to be times like last week or like in March, maybe even this week, where it does trade in line with equities. Use that relationship while it lasts, but understand it won't last forever. That's all I got. Bitcoin's been uncorrelated for almost its entire lifetime, but there might be a week or two or a month where it actually does trade very close. But don't be tricked by it in the long run. That's all I got. Enjoy this week. It's going to be fun to trade. I know I'm going to be watching that correlation trade. Have a good one. I'll see you soon. Actually, one more thing while I have your attention. Crypto.com is sponsoring these daily updates. I bring you news, themes, trends, moves in the market, what I think's happening, and they're sponsoring these, and I'm going to share what I think about Crypto.com using that app and also how it can benefit you. So sign up, download the app. I'm waiting on my Crypto.com card to get here. Once it does, I'm going to show it to you. We can cover all the benefits, but staking and earning return or yield for your coins has been really attractive in the market. Think DeFi. Crypto.com actually lets you do that on the app. So download the app right down there, and in the coming weeks, once I'm set up there, we're going to walk through coins, what you can earn on yield, whether you can buy those coins with a credit card in their app, exchange. They have so many killer features. Download the app. Thank you, Crypto.com, and thank you guys for watching. I'll see you next time.